Toronto has nearly 4,000 brand new condos, and they're just sitting there empty. At the same time, a lot of people, such as nurses, teachers, and construction workers, can't afford to live in it. So, what does the government do? They entered into a public private partnership and did something smart. And I want to break down exactly why, because I think this is one of the most interesting real estate stories of 2026. So let me tell you what's going on in the Toronto condo market right now. Prices are down almost 9% year over year. Brand new units are sitting on the market for 54 days on average. And the end of 2025, the GTA and Hamilton area was sitting on 3,897 completed brand new, never lived in condo units that nobody bought. That's 131% increase over year, more than 5 times higher than 2023 levels, and about 10% of the pre-sold condos that were registered in 2025, people couldn't close on them. So developers took those units back. We're talking roughly 3,000 more units on top of that. So you have developers bleeding money on empty inventory, and then you have construction slowing down because nobody wants to start new projects when you can't sell what you already built. And you have renters, regular working people who can't afford to live anywhere near where they work. That's a problem, and it's been sitting there with no real solution until now. This week, a company called High Art Capital partnered with the Building Ontario Fund, which is a crown agency backed by province of Ontario, announced a $1.3 billion fund with one specific goal: buy up blocks of these empty completed condos across the GTA and convert them into long-term rental housing. Here are the numbers: 22,000 rental units total. 500 of those will be affordable units locked in permanently at 25% below market rent or 30% of median household income, whichever is lower. The units have to meet specific criteria: blocks of at least 10 vacant units in the same building completed after January 2023, located in Toronto, Durham, Halton, Peel, or York region. And leasing will be managed by two of Toronto's most recognized names, Tridel and Menkes. Okay, so here's my take, and I want to give you 4 reasons why I actually think this is one of the smarter moves, especially for the government. Reason number one: the government is terrible at building things, and they know it. Every time a government tries to build affordable housing from scratch, it costs a fortune, takes forever, and delivers less than promised. There are over a million approved housing units in the GTA right now that are just sitting stalled, approved but not being built. The government has thrown tens of billions of dollars at the housing problem, and they haven't been successful, to be honest. This deal goes around the entire problem. No construction, no permit, no delays. The private sector built the units already. The government is just being smart enough to use what exists. Reason number two: the taxpayer risk here is actually very low. The government's contribution is 300 million in mezzanine debt financing. Mezzanine debt means they get paid back before the private equity investors do. So the rest of 1.3 billion fund, it's private money. So the government is putting in 300 million and unlocking over $1 billion in private capital. Not a bad deal. Reason number three: it helps the condo market and keep construction jobs alive. This is the one that people don't talk about enough. If developers keep sitting on thousands of empty units with no exit, they stop building new projects. And when they stop building, construction workers, consultants, and the trades, they lose jobs. The whole ecosystem suffers. By giving developers a real buyer for their distressed inventory, this fund stabilizes that segment of the market and keeps the confidence alive. And there is a path forward for the new development. That matters for the long-term housing supply of this city. Reason number four: it finally serves the higher middle class renter. The 550 affordable units in this fund are specifically designed for workers who make too much to qualify for subsidized housing, but not too little to afford market rent in the GTA. This is the group that nobody has been helping. Not social housing programs, not the private market. This is your nurses, your teachers, and your transit workers. People who keep this city running and have been quietly getting priced out of it for years. This program was literally designed for them. Now I want to be balanced here because there are legitimate criticism of this deal and you deserve to hear them. First, only 550 out of 2,200 units are truly affordable. That's 25%. Some people still argue that 1.3 billion fund with government backing, the affordable component should be higher. That's a fair point. Or maybe government could have contributed more and bring more affordable housing to the market with the same model. Second, some will say this is essentially a bailout for developers who misjudged the market. They built too many units at prices that nobody could afford, and now public money is helping them find an exit. Also a fair point. And third, this doesn't fix the root cause. Development charges in Ontario accounts for 31% of the purchase price of new housing. Until that changes, the economics of building affordable housing from the scratch remains broken. But here's my response to all of that. Getting 550 permanently affordable units into the hands of Toronto workforce, units that already exist with zero construction risk and minimal taxpayers exposure. This is a real win. Don't let perfect be enemy of good. In a city where affordable housing waitlist is 12 years long, I'll take 550 units delivered right now over promise of 5,000 units delivered never. So that was my take. But I want to know what you think. Is this a genuine move or is it a corporate bailout dressed up as affordable housing? Drop your opinion in the comments below, and if you want to stay on top of what's actually happening in Toronto real estate market every week, hit subscribe. I'll see you in the next one.